Well, no surprise that rates were left on hold, although there were a few glum souls calling for a cut. The Reserve Bank pointed out that inflation is consistent with the target. Growth is close to trend, although Europe is contracting. US growth is only modest and there's uncertainty about China. Also, the Aussie dollar is higher than might have been expected given the decline in export prices, said the Reserve Bank. So that's why the market is pricing in a full percentage point of rate cuts over the next 12 months, although there isn't a lot of support for that sort of forecast among economists. The Reserve also observed that the rates that people are actually paying are a little below average, and that's working its way through the economy, with house prices up a bit and business credit slightly firmer. The dollar climbed from 102.3 US cents to 102.8 at 2:30 when the decision came out, so obviously there are a few sad punters betting on a rate cut. On the share market today, Fortescue Metals was centre stage with an announcement that it's putting off the planned expansion of its Pilbara mine and cutting costs by $300 million, including an unspecified number of staff cuts. With the iron ore price at less than $90 a tonne as it is today, Fortescue's profit margin is around $5 a tonne, according to analysts. The company needs to cut costs in case it falls further, as some are predicting. Some investors aren't waiting around and they sold out of Fortescue today and bought Rio Tinto, which is still making about $35 a tonne profit. BHP and Rio are the lowest cost producers as well as the largest. And at these prices, Atlas Iron, which is one of the smallest, would be losing money. The market as a whole lost 0.6% today, mainly because the banks were sold off. Oh, and here are the cities left out of last night's house price chart: Adelaide, Canberra and Hobart, as well as the national average. And that's finance.